Africa is standing at a digital crossroads, a pivotal moment brimming with both immense potential and significant challenges. The decisions we make right now in policy frameworks, in innovative product development, and through strategic partnerships will indelibly define our financial future for decades to come. At the very heart of this critical decision-making process, the dynamic interplay of fintech and artificial intelligence. And just a few weeks ago, Johannesburg played host to the Digital Finance Summit, an event that provided us with a raw, unfiltered, and deeply insightful look into that very future. If you currently run a business, are at the helm of a promising startup, or simply dream of building something truly disruptive and impactful within Africa's rapidly evolving tech space, then this isn't just a simple recap, it's a crucial wake-up call. Because what was unveiled at the summit has the power to either dramatically accelerate your growth trajectory, or, conversely, leave you struggling to catch up. Over the course of the next few minutes, I'm going to meticulously unpack the summit's most significant revelations, including real-time shifts in regulatory landscapes, the emergence of billion-dollar opportunities ripe for the taking, and the often unseen AI biases that are silently and subtly shaping the landscape of who gets funded, and perhaps more importantly, who is inadvertently left behind. Whether you identify as a founder pushing the boundaries of innovation, a policymaker shaping the future of finance, or an investor seeking the next big opportunity, what you're about to hear today has the potential to radically shift the way you strategically approach the next 12 months and beyond. So, without further ado, let's dive straight in and explore the future of finance in Africa. Africa is the fastest growing fintech region in the world. In 2023 alone, over $3.2 billion was invested into African startups, 36% of it in fintech. Why? Because the unbanked population still sits above 45% and mobile phone penetration exceeds 85% in many countries. The Digital Finance Africa Summit 2025, held in Johannesburg on July 3rd, brought regulators, CEOs, investors, and AI developers together. Their goal? To tackle one big question. How do we balance innovation with inclusion? Here's the headline that's making waves across the continent. New fintech regulatory sandboxes are officially rolling out in South Africa, Kenya, and Nigeria. This is a game changer, folks. This means startups can now test innovative products and services in a controlled environment without the burden of full licensing, right from the get-go. This streamlined approach significantly reduces the often lengthy and complex time to market by up to 40%, giving these companies a crucial competitive edge. But there's even more happening beneath the surface. South Africa's Reserve Bank has confirmed that they are actively exploring comprehensive stablecoin regulation, signaling a potential shift in the digital currency landscape. Kenya's CBK has just announced that standardized virtual asset tax rules will be implemented starting in Q4 of this year, bringing much-needed clarity to the crypto space. And in Nigeria, the SEC is placing a strong emphasis on the critical role of AI ethics in financial automation, even hinting at the development of mandatory auditing frameworks for algorithmic decision-making processes by the year 2026. These aren't just routine policy updates or bureaucratic procedures, they are clear green lights, or potentially concerning red flags, for forward-thinking founders who are prepared to move fast and adapt to the evolving regulatory landscape. The time to act is now. This year's summit theme was Tech for Inclusion, Not Just Innovation, a powerful call to action for the industry. One of the hardest-hitting panels focused squarely on the insidious issue of AI bias, a problem that's far more pervasive than many realize. A recent University of Pretoria study brought this issue into sharp focus, revealing that credit-scoring AI tools are a staggering 28% more likely to approve male applicants than female applicants. This disparity persists even when both applicants present identical financial profiles. The underlying cause? Historical training data, reflecting existing societal biases. But within this challenge lies a significant opportunity. Founders who are committed to building bias-free algorithms have the potential to not only serve the underserved populations, but also to cultivate trust with investors and ultimately dominate a specialized niche market. Several VCs present at the summit openly stated that they are now proactively adding ethical AI metrics and considerations to their standard deal checklists, signaling a shift in investment priorities. Here's a compelling fact to consider. According to McKinsey, Actively correcting algorithmic bias within African lending systems has the potential to unlock a staggering $316 billion in credit that was previously inaccessible. This represents not only a massive economic opportunity, but also a chance to foster greater financial inclusion and equity across the continent. Funding is shifting. VCs at the summit said they're pulling back from vanity fintech, apps that don't solve infrastructure-level problems. Instead, they want cross-border payment solutions, SME-focused digital banking, insurtech for informal sectors. One investor from TLCom Capital said, if your fintech doesn't directly move money, insure risk, or track value across borders, it'll be harder to raise in 2025. Translation? Founders must align with macro-level financial gaps, not just product fads. If you're an entrepreneur, here's how to stay ahead. 1. Align with regulation. Build into the regulatory sandbox systems. Apply early, build lean, and test fast. 2. Embrace ethical AI. Train your models with diverse data. It's not just moral, it's profitable. 3. Solve infrastructure problems. Focus on utility, not user interface. The real demand is in back-end solutions. If you're a policymaker or stakeholder, start collaborating with tech founders earlier. Create more APIs for fintech integration. Provide clarity on virtual asset classification. This isn't just another summit, it's a marker in the timeline of Africa's digital evolution. What you choose to build, support, or ignore now will determine your place in that future. Because Africa's digital finance space is not slowing down, it's accelerating. And whether it's bias, bureaucracy, or breakthrough, you need to be in the room where it happens, or at least ahead of the curve. So if you're serious about transforming your business, community, or industry, don't treat this as another recap.